Apple beats quarterly estimates, yet are reporting sales down for the fourth consecutive quarter, and the Dow up yesterday over 550 points. This is Koki Cox here bringing you three for three on Friday, November the 3rd. I am so happy to be able to give you a positive weekly update given the past few weeks all have been down. That said, this is the week in review and your three for three. We're looking at the Dow, the S&P, and the NASDAQ all up in positive territory, as well as bonds this week. Outperforming is tech sector. So the Qs are outperforming S&P 500 and the Dow. Moving into winners and losers. Actually, that was a bit quick. Let's go into week in review. Yields are falling just a bit, which is a good thing. The FOMC meeting, as you know, did not raise rates, and they're anticipating one more rate in the offing. Most of it's expected that. So with that, a lot of stocks are having a rebound. I will tell you, on the AlphaVest side of indicators in our rules-based strategy, we are still half on the sidelines with our switching bucket. So our indicators haven't yet said it's time to dip our toe back in the water. So for those of you who are implementing and using our 3-6-10 strategy and using our switching strategy, just know that safety is paramount. The light is still yellow, and we are still on the sidelines for a bit of your equity portfolio. Moving on to winners and losers, you can see here on the screen, Grainger, Lynn, IBM, Pentair, and Nucor. These most of these holdings come out of either our equity income portfolio and or the AlphaVest Aristocrats portfolio, which we're going to talk about here in a minute, that not all dividend stocks are created equally. So we're going to talk dogs, yes, as a follow-up from a three for three about a month or so ago. Losers, you'll see at the top there, West Pharmaceuticals and Eli Lilly. Both of those stocks up handsomely year to date, not on watch, just had a bad week. That said, of stocks that did fall out of the portfolio this week, and just a little touch on discipline and portfolio strategy. It's often said that you want to buy low and sell high, right? Yet it takes a lot of discipline to want to rebalance portfolios and trim stocks that are doing really well in clients' portfolios. That's what's happening this time of year. That's what's already happened in your portfolios. It's year-end tax management time. So we're also looking at balancing your gains and losses. So never worry, that's happening. But that said, we did trim Lockheed Martin from our AlphaVest equity income portfolio. It has been up a really, really nice 11% over the last 30 days, yet has been underperforming for some time. On a 3-year basis, it did beat the Dow Jones Industrial Average, up over, Lockheed has been up over 9% on average for the last 3 years, yet it's just starting to slip. So it didn't slip by us. So Lockheed has fallen out of the portfolio, and we will be adding in its place Truist Financial. So we're dipping our toe in the water with regional banks, and we feel that now is the time. Back to dogs. Well, is Truist a dog? Very high dividend yielder, and we hope not, because it's going in the portfolio today. So the Garden and Gun Good Dog photo contest is out, and we have a winner, and it's Bandit. I had a Bandit at one time. So congratulations, Bandit, on being the winning dog. Let's see. Not all dividend stocks or dogs of the Dow are created equally. Dogs of the Dow strategy is actually off 12% year to date. And if you invested in, the well-known Aristocrat ETF Noble, you'd also be off close to 5% year to date. Dow Jones Industrials, its benchmark up 3.5%, and the AlphaVest Aristocrat model is up over 13% year to date. So I do think that these markets do offer an opportunity for specific and picky and being very choosy about quality dividend stocks as well as non-dividend stocks. So that said, also wanted to give you some feedback of the worst dog of the year. Dollar General, down 57%. Who would have known? Is it in the portfolio? No. Is it in yours? Time to take a look. Thank you so much for joining us. I will be back with you next Friday for 3 for 3.